With oil prices exceeding $117 a barrel, how far is it likely to continue soaring? And just where is all that money going? Are there any serious efforts underway to develop alternative energy resources? Who wins and who loses in the oil rush? This is Inside Story. Hello, I'm Kamal Santamaria. If there is one commodity in the world which affects almost everyone in one way or another, it is oil. It has a knock-on effect like no other. The price goes up and suddenly it's more expensive to buy petrol, to transport goods, to catch a taxi, to fly overseas. And that's just scratching the surface. Just 10 years ago, the price of oil was less than $20 a barrel. These days, well over 100. And even the recent discovery of a massive oil and gas reserve in Brazil didn't put any dent in that. The flip side, of course, is that high oil prices mean bigger profits. First, for the countries who produce oil. Last week, the US said OPEC country profits are likely to increase by 45%, reaching more than $1 trillion from oil sales this year. Then there's the oil companies. Even though they're sending less oil into the market, they're also making unprecedented profits. Shell, for example, one of the 7 oil companies which controls the world oil markets, made more than $27 billion in 2007. ExxonMobil, another one, its net profit rose to $40.6 billion last year. The sales exceeded $404 billion. That is more than the GDP of some 120 countries. And don't forget the government's coffers. They're raking it in every time you go to the pump. In the US, the government levies a tax of 26% every time you fill your car, whilst in France and in Britain it's as high as 53% and 55% respectively. The question is, where's all that money going? Does it simply go into looking for more oil, or is it used for the exploration of more sustainable energy resources? Joining us to discuss these issues are our guests. In London, Mamdouh Salameh is an international oil expert and a consultant for the World Bank. In Oxford, Christopher Malton, a chairman of Organic Power, a company that develops alternative fuel solutions. He is also the UK's representative on the Bioenergy Committee of the International Energy Agency. And also in Washington, D.C., Daniel Weiss. He is the Director of Energy Strategy at the Centre for American Progress. Gentlemen, welcome to Inside Story. I'm going to go first to London and speak to Mamdouh Salameh. Let's deal with the basic numbers first of all, Mr. Mamdouh. It's at $117 a barrel at the moment. How high do you expect it to go in the near future?
I project that the price of oil will exceed $125 in the second quarter of this year. And within 2 to 3 years, I expect the price to exceed $150 a barrel. That is because of the global demand and because of the lack of new oil discoveries in the world, with the exception of the recent discovery in Brazil.
And those numbers that you give there, are they, would you call them the true price of oil, or are we simply in a market where the market dictates the price and that's what you pay? Or is there, do you think, an actual true price that it should be, perhaps?
Actually, you cannot put a real price on oil because it's part of the global economy and it affects every single part of the world. So it is a precious element, and the price is beyond money. However, we must, for the sake of our calculations, put a price. I said that the price could exceed $125 within the next 3 to 4 months and will exceed $150 in the next 2 to 3 years. However, that price is underpinned, as you appreciate, by the global demand, by the lack of discoveries, also by the weakening dollar, and by the war in Iraq.
Right, let's go to Daniel Weiss in Washington, D.C. We've heard what Mamdouh Salameh had to say there. As high as $150 a barrel. He thinks it could go in the next few years. What do you think?
Well, I'm no oil predictor, but I do know several things. First, that the big 5 oil companies in the U.S. are going to earn enormous profits. They earned $120 billion last year. They've earned over $500 billion since 2001. And higher oil prices means higher profits. The question is, what are they doing with the profits? In fact, the oil companies have been spending a lot of their profits on buying back their own stock to increase the value of the stock that remains in the marketplace. They have not been spending very much money at all in investing in new renewable alternative sources of energy.
Christopher Moulton in Oxford, we hear what Daniel Weiss says there about what the oil companies are up to. Do you think that's where perhaps our anger should be directed when we have to fill up at the petrol pump and it costs so much? Is that where the anger should be directed?
I'm not sure about whether it should be anger. I entirely agree with what your man says in Washington. The problem is, though, that you're talking about the price of something and the cost of something. The price of something is a market price, and frankly, the people who are sitting on the oil have a right to charge as much as they feel like for it. It's not going to last that long, and it's doing an awful lot of damage when we're burning it. So that's their problem. What worries me is the cost of it, which is certainly a lot less than that. When it was $20 a barrel, as you said just now, I don't think it cost any more now to take it out of the ground at $100 a barrel than it did when it was 20. But the cost to the planet is something quite different, and that's what we're concerned about.
So just to go back to a previous point, when you talk about the companies, you're basically saying it's their business, they're in the oil industry, and if they make hay while the sun shines, then so be it.
Well, the sun's going to stop shining, or rather the hay's going to stop being made.
Let's go back to Daniel Weiss in Washington, D.C. You raised the points about the companies and the amounts of money they're making. To your knowledge, what do they do with that money? Does it go, I mean, you mentioned some of the things about it going back into their own pockets effectively, but what about putting it into things like, sustainable energy and things like that? Because there are oil companies these days who like to tell us that they are environmentally friendly.
Well, we looked at this question last year, and we found that the oil companies were spending a lot of money buying back their own stock, and were spending about 1% or less of their profits on investments in new clean alternative energy. Now, BP and I believe Shell have announced some new investments since that study was done, but it's still a very small percentage compared to their overall profits. Most of their profits have been used to enrich their executives and their shareholders rather than do something that would benefit society at large.
Okay, so we've dealt with the companies. I want to also deal with the countries, the governments of countries which are oil producing. Mamdouh Salameh in London, what do you think about the way that countries use their money? I think there's an example you could use of, say, Venezuela, for example. Hugo Chavez putting money back into his economy from all the oil profits. What about other countries? Do they do enough?
I think they are doing quite a lot, and they have learned from the first oil crisis and the second. Of course, they are keeping a lot of that oil revenue for a rainy day. However, they are recycling a large percentage of it into the global economy through imports of different commodities, and also through investment in wealth-creating projects in the Asia-Pacific region and around the world. So they are doing their bit, in addition to allocating a large percentage of that revenue to improving the infrastructure in their own countries and the educational level, and building the country and raising the standard of living of their people.
Who's falling short, in your opinion?
I don't think the oil producers or oil exporters are falling short. All of them, including Venezuela, are trying to improve their economy. Of course, some of them also are spending a bit on expanding the oil production capacity. But I am sure that the decision makers are not going to expand that capacity big enough so that the oil price collapses eventually, as it happened in 1985 when the oil price hit $10 after OPEC spent billions of dollars expanding their capacity. It is not prudent on their part to do that. They need a good price for oil, which will be also acceptable to the global economy and acceptable to their own economies.
There's a problem I see here, because we were just looking at some pictures of some of the Gulf states, obviously, where oil dollars are so very important. Important to the point where these countries are basically built on oil dollars. What would happen if there was a decrease in the price of oil, or if there was a problem with oil? I mean, are these countries diversified enough to carry on their economies without oil?
I think they are already diversifying their economies, but not at a fast rate. 80 to 90% of their revenue comes from oil. So they are dependent on one commodity, particularly Iran, the Gulf states, and Saudi Arabia, although I must admit that the Saudis are starting to diversify now, and the United Arab Emirates is diversifying as well. So, but I would hope that they will accelerate that diversification so that there will come a time when they are not to that extent dependent on oil.
Gentlemen, stay with us. We're just going to pause for a moment, take a short break. When we come back, a closer look at the efforts made to develop alternative energy. Back in a moment.